Good morning, everyone, and welcome to our special edition of the Fed's reaction. The market's reaction to the Fed interest rate announcement coming down in just a few minutes. My name is Raul. I'm the coaching and education coordinator here at Trading Winds. Pleasure to have you with us. I'm here with our head trader, Vince Vora. We're just going to be talking about the markets over the next half hour, 45 minutes or so, see where we are. We had our market chat earlier today. Didn't really like any positions that to open before the Fed announcement, but we'll see if that changes right after. Let me bring in Vince so we can get into the session. Vince, good morning. How are you?
Good morning. I'm doing well, thanks.
You're sounding great. I know you said my audio level is a little bit low.
Yes, I can barely hear you.
I hope everyone out there can hear us. Let me just make sure that the stream on YouTube is going well, and it looks like it is. All right. I noticed something interesting. I was going back and looking at the last few times that we had 100 basis point increases, and saw this article from Forbes. And it was hard I had to read it twice to make sure I read it properly. The last time the central bank raised rates by 100 basis points was over 4 decades ago when Paul Volcker was Fed chairman. Listen to this. The Fed raised rates by 100 basis points, not once, not twice, but 7 times between 1978 and 1981.
Wow.
Surprising, isn't it?
It is. That was very aggressive.
In November 1978, inflation was at 9%. It peaked in March of 1980 at 14.6%. So even with this hammer of the 100 basis point increases, it took them a while to get it under control. You want to guess what the stock market did during that time in terms of percentage loss?
Was it close to 50?
It's actually 60%.
60, yeah.
Yeah, the S&P lost an average of 2.4% 1 month after a 100 basis point rate hike, according to CFRA data. Where are you on all this in terms of what you think is happening with the markets? And is this a situation where the Fed says, let's just get it over with?
Well, I that's what I'm thinking. I mean, they're obviously sticking to their plan here, and there's no question, and they're determined to get inflation under control by raising rates. So that's why I think the street expects at least a 75 basis point hike. But why I'm thinking they might do a full percentage point is to achieve that goal sooner than later. We know it's going to have an impact on the economy. They know it. This is intentional, but if we can get it over with sooner than later, then why not? So I'm thinking that because the last couple of inflation numbers have not decreased significantly, they've hardly moved. I think they're going to be very aggressive. I've been watching what the markets have been doing, and we've been up about 130 points or so on the Dow. We have just gone negative. So we're right at 2 p.m. Is the news out? Let me refresh here. I don't think it is. I'm keeping an eye out to see what the decision is. I don't see it yet. We are negative now.
So I do see it. I do see it here. Vince. Fed raises rates by another 0.75 of a percentage point to fight inflation.
So it's exactly as expected then.
Yes.
Right. So now we'll have to see when Powell speaks. I believe he's due to speak at 2:30. What he says, has the language changed at all? Has their plan going forward changed at all? Right now, once again, they followed through just like they said they would with an aggressive rate hike. The dollar, here's the dollar index. We are at 111.56. So we've raised another half a cent here. A very, very strong move. The 2-year, the yield on the 2-year note is now 4.08, almost 4.09%. And as we were saying this morning, as you noticed that was at 0.77 at the beginning of the year. It is now, oh, look at that, 4.1, rising steadily here. So, yes, initial sell off on that news, but exactly as the market was expecting.
So I noticed NASDAQ down just flat, down about 10 points or so on the December futures. The one index that's actually holding up relatively well, the small caps, IWM.
Yeah, I mean they're giving up the gains as well, but they're still slightly green, up 2 or 3 points now. So not much movement. With a 75 basis point hike, it's exactly what the market was expecting. So I didn't think we would see a big move. Yeah, we've given up those gains, but really overall, we're still pretty flat. So we'll see where the next, 2 hours go here into the close. Are we going to sell off significantly or not? I don't see any reason why we would, unless there was a major change in language. I mean, do I expect the market to continue to drop? Yes, I do. We are trending lower. There's no question. Whether we look at the S&P, the Dow, the NASDAQ, I mean, we're definitely trending lower. So I would expect that, but I'm not expecting, a massive sell-off here just because they raised 3/4 of a point. We all knew they would do at least that. So it'll be interesting to see what Jerome Powell's comments are half hour from now.
Yeah, he's expected to speak, like you said, at 2:30 Eastern, about 27 minutes from now. One of the items that one of the stocks I was looking at prior to the announcement here, it doesn't look like it's had a whole lot of effect, but the chart on Alcoa just looks very bearish.
It does. And, in one of our chat sessions with our members, we had highlighted this head and shoulders pattern here recently on the daily time frame. The neckline here, the lowest point between the two shoulders would be right here. And we crossed that a little while ago. And you can see that ever since then, we've accelerated lower. Now, here we are right back at the July low, the July 14th low. So if we move below there, which looks highly likely right now, then we start looking for the next area of support. And let's broaden out to the weekly chart to see where that, and you can see there isn't a whole lot here holding this up. So that is a critical level to keep watching. We're going to round it to 40 exactly here. Any move below there, and we could see another pretty significant move downward on Alcoa.
Some of the other ones now, NASDAQ down 109 points. So we're
Yeah,
sliding.
the Dow's down 250 here pretty quickly.
Yeah, we're sliding pretty quickly here. Big movers on my screen. Let's look at some of the big caps. Apple now down 1.4%. I think it was up just prior to the announcement at 154.60.
Yep.
If we look at the daily chart, it hit its head right on that 20 period moving average and came right back down.
That's exactly. And you see how it respected it here. It's done so again. So this looks very, very bearish here. This could be another great level to short at. Initially for a move back to this prior low here and near 148. We're at 155 and ultimately down to 128 here, if not lower. When we look at the weekly chart again, here we are, we're still hovering above the 20, but should we clear those lows, here's that 128 low. Below there, it really starts to get ugly from there. And remember, Apple has held up better than most. Apple is one of the stocks that, hasn't been affected much throughout the year this year. But now it looks like it's more and more under significant selling pressure here. And where are we? Down over 1% right now, down at 155.
Dude, let's just throw in the towel. Let's just get our 4% interest rate on a 2-year bond and call it a day. What do you think?
Yeah, it's 4.115 now. That keeps climbing. So
Jumped 15 basis points right after the announcement.
That's right. That's right. You know, where's the dollar? 111.47. So, yeah, you know, we're in a clear trend. That's for sure. That's what we can obviously see, and we should expect more of that. So, you know, as attractive as that 4% yield looks to be on the 2-year, it's likely going higher from here. And I mean, you look at these charts and how clean is that? Just a fantastic move. Nothing much standing in its way. I mean, the unless the Fed comes out at 2:30, unless Jerome Powell says, you know, okay, that's it. You know, we're pretty much done here, which I don't think anyone expects. I don't think they're done, not even close yet. And you know, they will ultimately hit a level where they'll feel like they cannot raise beyond that, you know. So what's that going to be? Right now, the Fed fund rate went what, 2.3, I guess, right? 3 to 3.25. So, you know, is it going to be 4 where it tops out? Is it going to be 5? Is it going to be 6? Where's it going to be? You know, amongst most professionals, what you hear is that 6% mark. But imagine we go from 3 where we are now to 6, right? Raise another 3 points. I mean, this isn't over yet. That's the bottom line. This isn't over yet, and that's what's so scary for the outlook on equities here.
Yeah, how surprised are you with the move on that 2-year bond?
I'm very surprised. I mean, you know, if we go back to the start of the year, right, down here, yes, we had made a move. We had started to climb after being flat for the longest time. But did anyone expect us to hit 4? You know, I think some people would have said, yeah, we expect 4, but not in this short, you know, period of time. I mean, in a matter of months, we've gone from below 1% to above 4%. I mean, just an incredible run. And again, the most surprising thing is that we're not done yet by the looks of it. So it looks like equities are starting to get another bounce again. So, you know, we always see some volatility just after the announcement. We're still seeing prices bounce around pretty quickly, but overall, you know, I do think the market got what it was expecting, which is another 75 basis point hike. And so what that would mean is just more of the same, meaning we stay the course. And right now, that trend is to the downside for equities.
We were talking before a lot of the folks joined us just before we came on. Hard to believe that between 1978 and 81, there were 7 of these 100 basis point hikes, 7.
Mm-hmm.
And we were worried about this one today.
Right.
They didn't do it. It's a tough spot for the Fed, isn't it?
It is. Some could argue that they got themselves into that spot, but regardless, you know, what have we seen now? Has it been 3 straight 75 basis point hikes? Or has it been 50, 75, 70? I can't remember now if it's 2 or 3 in a row. But you know, Powell is getting Volcker like, not to the same extent yet, but he's being aggressive. And, you know, obviously everyone has a different opinion on it. The bottom line is the Fed feels like they have no choice but to do this, but to try to knock the economy down a little to slow inflation. So we can look back and try to figure out who's at fault, but what does it really matter now? I mean, it's worth doing. That's an exercise worth doing for the future. But right now we're in this mess, and they don't have many options here. They don't. So the worst case scenario here would be that they reach that Fed funds rate level that they believe they cannot go above. Let's say it's 4%, right? Let's say there's another 1% of room that they feel they can raise rates to. What happens when they get to 4%? if inflation is still hot, then what? This is the dilemma they're faced with. I mean, and we do know they are going to begin tightening as well, meaning unwinding their balance sheet of bonds they purchased throughout that lengthy period of quantitative easing. Now we move into quantitative tightening. So that's going to remove liquidity from the market as well and will help. So that may be what they turn to in a very aggressive way once they feel like they've hiked rates as much as they could.
I look at a monthly chart of Apple, and you and I look at pivot highs, pivot lows on the monthly chart. If we end up where we are now or a little lower, this will be an official pivot low, will it not? Looking at January 2022 and then August 2022.
Well, a lower high pivot for sure.
Correct.
Here?
Yes, I'm sorry.
Yes.
A lower high.
Yes, a lower high pivot, absolutely. Then the only thing is, can we break the low? If we get below the June low, the June 22 low here, and that's that 129-ish low, 128-ish low. If we break below that, then we have lower highs and lower lows on a monthly time frame, which means we are in a bear market on the monthly time frame here. And look at this run. This run was so strong, so quick that it left very little support below, which means if we break this low, we are likely going to retrace the full move. So we're talking about Apple going from 155 now to potentially the 128-ish area to test. But if we do not hold that and we break below that, then from 128, we are likely to see, 55, 60 at a minimum. So, and again, some viewers might be looking at that and laughing and thinking, there's no way Apple will ever drop another 50, 60% like that. Well, we've seen many, many things that we thought were absolutely impossible. Oil going negative comes to mind. Who would have ever thought that? We've seen it. Who would have ever thought that most of the stocks out there that have fallen 80 and 90% already, that would have happened? I don't think anyone would have expected that level of a drop. I don't think anyone would have expected the dollar to be where it's at. I don't think anyone would have expected the bond yields to be where they're at in such a short period of time. So I'm not going to say this won't happen. I'm saying that at this point, Apple needs to remain above 128. If it goes below, I think it is going to 60.
Euro USD, you had just kind of hinted at that. A year ago, that was around $1.20. It's now under $1.
Yeah, that's right. So again, if you had asked someone here back at just at the beginning of the year, right, where it was 122 or so, and you said, "Hey, I think the euro and the USD are going to parity," they would have laughed in your face, right? I mean, who would have expected that? Yet here we are at 98 cents for the euro versus the USD. I mean, just an incredible fall. And what's worse here is that where do we go from here? Well, doesn't appear to be much, at least not until we get here into the 90 area, high 80s, right? Is it going to hold? I mean, that's right now. If you look at these pivot highs and these pivot lows and draw a line across there, what's the level we end up at? About 85, more or less? Yeah, about 85. We're at 98. Is that possible? Absolutely it is. Absolutely it is. It's probably likely at this point. So, yeah, times have changed, that's for sure.
I'd asked you in our one of our market chats last week if you feel that the British pound and the US dollar will come to parity. You said, yeah, I'm actually quite confident that it would. I look at the pound now on a monthly chart. We can look at any time frame. We're at the lowest level since 1985.
Yeah. Let me try to look at this. USD GBP. Yeah, 88.70 exactly. And look at this climb, right? So again, look at where we were at the start of the year, right? we're here at the start of the year, we're around 75 cents, right? US dollar to the pound. We're now at 88.7, right? We're getting there. We're getting there. So, but the reason why I say we probably will get there is what's above here? Is there any resistance? No, I don't think there is. And it's not just what you see on the chart, but everything that's happening out there with rates going higher and all these other issues. It just seems very likely. It just makes a lot of sense that we are going back to the highs here, if not higher. So look for parity on this pair in the coming months.
Where do you keep your immense wealth in this economy? What currency do you like?
You have a very secure mattress, maybe. No, the dollar really has been the go-to. Usually when we see the markets move lower, everyone talks about the gold, right? Gold, silver, the yen being safe havens, right? Bonds, right? So let's look at those, right? Gold, silver have moved lower. Actually, I should show the charts, right? Let's go with the weeklies. They've pulled back. Going to the start of 2022, we saw a rise. It's completely pulled back. Oh, sorry, that's oil. Here's gold. Here's the start of 2022. And we're below there. Silver, same thing. Bonds, I'll use TLT as the 20-year treasury here. From 2022 right here, look at that. It's been nothing but a drop straight down. And the yen, let's see, USD, JPY, right? USD completely dominating the yen. FXY is the Japanese yen ETF, right? Oops, let's try that again. FXY. There it is. So look, since 2021, this has been dropping, but look at 2022 to present, how steep of a drop that is. So, and then others thought, hey, Bitcoin's the next thing. When equities drop, money's going to Bitcoin. And how has that worked out so far? It has not. Whether you look at Bitcoin, Ethereum, you name it, any crypto, it's been beaten up as much, if not more than anything else. So the only real winner here throughout this downturn has been the dollar and bond yields, not bonds. So yeah, the dollar has been the safe haven here.
It's hard to find stocks that are trending to the upside. Much easier to find stocks that are trending down.
Sure.
It just feels like we're in for the next leg lower. Do you get that same feeling?
Yes. So there are a handful that have moved higher. We are still trading some higher, like what is it?
ELF?
ELF, sorry.
ELF is one, yeah.
ELF is one, right? What was it? DHT?
DHT is another.
Right? As the saying goes, there's always a bull market somewhere. You have to really scour the market to find it. But once you do, you go with the momentum. But right now, as far as the big names, all right, and the indexes, the Dow, the S&P, the NASDAQ, the Russell, all trending lower. What's scary is, at the start of the year, we saw a lot of those pandemic plays like Zoom, like Peloton, et cetera, reversing those gains, right? Here's Zoom from that high, 570 or so. It's now a $76 stock, right? You look at Peloton, et cetera. And many of these names start to fall apart as things start to open up, et cetera, and life start to go back to normal. And although we were surprised at the magnitude of the drop, we weren't surprised that these pulled back, but the sheer number of stocks that did was surprising, except for the big names, right? So I'm going to go to the list of the most active options, some of the bigger names, right? Tesla, Apple, Amazon, Microsoft, right? Google, or whatever, Alphabet, Meta, etc. The big names that got us to the highs on the indexes, right? To begin with, those have pulled back a lot less than most other names. Most other names are down 80 to 90%. These are down 30, 40, 50, right? Not a whole lot from those pandemic lows. But here's the key. There's no support here. So, Google recently just violated that low. It looks like a falling knife. It should completely retrace this move. So we're talking about a huge move lower, potentially another 50%, right? Microsoft, same thing. NVIDIA just breaking this area now, which means it should come down to about 75. We're still at 133. Again, a very significant move possible. Amazon should retest the low at 100 pretty easily. We're at 120, potentially go even lower. Apple, we already talked about how there's very little support below. It could drop if it takes out this low. Tesla's held up, but again, if it ever comes down and breaks the 200 level, there's little holding this up. So we could quickly go much lower if some of these big names that carry a lot of weight on the NASDAQ, on the Dow, et cetera, on the SPY, we could see some pretty significant down days if the selling intensifies on the big names. Let's look at Meta. Meta looks like it's retraced that move, right? Here's the pandemic low, March 2020. We went from there, which is around 140, to about 380. Now we're back in the 140-ish area, right? 143. But here's what's scary. That's sort of the last level of support. There's nothing holding this up. This literally could become a $30 stock again, literally, without much difficulty. So again, some of this analysis may sound ridiculous to you, when you first hear it, but I've been following these technicals for like 3 decades. This is as clear as ever. I think everyone should be short Meta, honestly. This is a really ugly chart.
You and I this morning, we had looked at the volatility on a SPY strangle. SPY was at around 386 at the time. For the options expiring today, we looked at a 387 call, 386 put.
Mm-hmm.
And at the time, do you recall how much it was, Vince? It was about $6.20 or something?
Yes, I believe, yeah.
It's right around there. The interesting thing with the comments by Chairman Powell coming up is that the implied volatility at the time was about 85%.
Mm-hmm.
And you would think that the vol would have
come out of it. Yeah.
Because of the announcement, the vol's actually increased by 50%. It's about 125% on these 2 contracts right now.
Which kind of makes sense in a way, because he gave us exactly what we thought we were going to get, which was a 75 basis point hike. So now everyone's waiting to see what the language in his statement is. Does he change anything at all? Does he give us a hint at all to anything different than what he's been saying all along? If he were to come out and say, look, we've been aggressive, but we think we've reached the point where we could at least start to scale back on rate hikes, I think the market would rally hard on something like that, right? Any hint that they may be nearing the end of these rate hikes, I think the market rallies hard. But if he gives any sense of the opposite, right? Any hint to say, look, these are just not having the effect we thought they would, we may have to get even more aggressive, anything along those lines. And I think you see some big down days. So at this point, we're bouncing back and forth, waiting to see what he says. So yeah, the implied vol has been spiking. It'll quickly come out of these contracts once he gets his words out.
Big ugly red bars today on TME. That's 10-cent music.
Mhm. I mean, how much more pain can this take? I mean, we've gone from about $32 to a $4 stock. Yeah, it's down over 9%. It's a big down day for it, but um, below 3, there's really nothing here holding this up. The other thing to note that I keep mentioning to our members is when you look at volume on such a sharp move lower, right? What you're looking for is then some increased volume in combination of the stock starting to slow down its move lower, meaning if it's moving lower and lower and lower and then starts to consolidate on increased volume or starts to take higher on increased volume, that's a good sign that we're probably at the end of that drop. But we don't see that. I honestly can't think of any chart off the top of my head where we've looked and seen a major drop and then big volume with the price stabilizing or going slightly higher. No, we have not seen that. Anything with higher volume has also had bigger drops, meaning more and more sellers are piling in. And then you have some that have taken a breather, like Tencent, that has kind of gone sideways here. But you can see the volume just going lower and lower and lower, which means maybe it's running out of sellers, but certainly no one's stepping in to buy. And that's a pretty clear sign that we're not done yet with this bear market. And so we should expect lower prices.
You do like to use the volume profile on some of these charts, especially to see where we do have significant levels of support and resistance.
Correct.
How important is it to use that in your analysis, whether you're trading on a daily, weekly, monthly time frame?
It's very important because we can just visually look at a chart and say, okay, I see activity here, right? So wherever there's activity, you should expect more activity. Think of it this way. Right in here, throughout this whole area here, let me box it for you to give you an example. Okay. So these candles in here. So we could say, hey, there was a lot of activity here, maybe a lot of buying. And, then the price got pushed higher. And then when it came back down, it came right back to that level. And then we saw more activity. Why is that? Right. So a very small amount of activity going higher, equally small amount of activity coming back. But where there is activity, there's more activity. Well, that's because people react. So in other words, if I had bought here and I had watched this thing go up and I didn't sell, and then I saw it coming against me and I was still hopeful it would turn around, but it hasn't, comes down some more, still hoping it would turn around, but it doesn't. Then we get back to break even. I'm likely going to sell my position. Why? I don't want to have a winner turn into a loser. So although I'm very upset with myself that I didn't take profits, I'm glad I'm out at break even and not taking a loss. So action breeds action. And that's what you're looking for when you're trying to identify support and resistance. So, and what the volume by price indicator does, the volume profile indicator, is it'll total up the volume of transactions by price level. So at $22, how much volume was there? At 2201, at 2202, etc. What is the volume? And so when you throw the indicator on your chart, it gives you this vertical bar chart here, where by the price level, it tells you how much volume there was there. And you can see that based on the amount of data we have on our chart, because this will change depending on the amount of data you have. So this, I have going back 2 years, basically, going back to the start of 2020. From 2020 until today, the highest level of activity or volume has been at this price level here, right around $4.50, right in here. That is the most active area. So if price is coming down, right, and you're going through pretty thin volume, it should have a pretty easy time going down. Once you get to more significant volume, you're likely to see some sort of a bounce. It doesn't mean it's the absolute bottom. It doesn't mean it's going back up here necessarily, but it could bounce and then come back and test it again and then bounce and then come test it again and bounce and eventually most likely break through, right? Or clear the highs and go higher. So when you see consolidation, when you see that back and forth, that's what we call a channel. You want to mark the highs, mark the lows, and wait for a break one way or the other. But the volume profile indicator or the volume by price indicator helps you identify where you might run into support or where you might run into overhead resistance. So if you look at this now, let's say that Tencent starts to recover, right? Starts moving higher. Well, we know that in this area, we're still going to have a pretty tough time going higher. There's a decent amount of volume, right? Even right up to here. But above here, right, above 21, look at the bars, the volume bars here, right? They're pretty consistent. And then, boom, they shrink. And there's really nothing, right, above there. So when price moves into an area where was previously very little volume, it should have a very easy time moving forward, right? And it works both ways. So if it was to the downside, before we had this activity here, probably the busiest area volume-wise was this area here. So once price moved below that area and there wasn't much left, that's when we got a significant drop, right? But that's how it works. So it is very, very helpful. I suggest everyone use that.
The market's reaction to Chairman Powell speaking right now, the Nasdaq's positive now, so it's pared back all its losses. It's going back and forth between positive and negative here, looking for direction. I think as more words come out of Chairman Powell's mouth, market's reacting. Nasdaq now up 15 and 9 or so. So not really a clear direction one way or the other.
No. So it looks, basically we got exactly what we were expecting and we're flat on the day. So nothing major. You're obviously, like I said before, going to get some volatility right around the announcement, but how we close is the big thing. So, there's still an hour and a half or so left in the session. What does it look like? What do these numbers look like at that 4 o'clock hour, right? When we close, are we going to be where we're at here flat? Are we going to be much higher, much lower? That's what you want to watch. But the market looks like it got the rate hike it was expecting. And so far, looks like Jerome Powell's comments are more of the same. Nothing new, staying the course. And so really is nothing to get excited about. So tomorrow we'll get back to the usual routine, which in all likelihood is a continuation of this downtrend.
All right. That is our special edition of the FOMC announcement and the market's reaction to it. We hope you enjoyed it. If you did like this content, please subscribe to our YouTube channel. And we're happy to deliver this content to you every single day. Vince, thank you very much. We'll see you next time.
Thanks. Thank you. Thanks, everyone. Take care.